I got a comment recently of a viewer asking how to invest their first $1,000 into DeFi, so I thought it would be a great time to come on here and show you exactly how. So the easiest way to make income on your cryptocurrency assets is by taking advantage of the liquidity as a service business model. So if you don't already know what that is, I can explain it to you. So there's decentralized exchanges like Uniswap, Orca, and more, and they're places where traders go to swap one cryptocurrency asset for another. So here's the exchange here. Now, us as a liquidity provider could come over and deposit our cryptocurrency assets into the exchange. For example, we could put up Solana and USDC into the exchange, and we could get paid when traders swap their Solana for USDC or their USDC for Solana. So for example, when the trader comes over here, I'll put this as the trader, and wants to swap their USDC here, USDC, and they want to get out Solana in return from the decentralized exchange, what they're going to be doing is paying a fee to the decentralized exchange. So during this swap, they're going to be paying a fee. But what's cool is that a percentage of this fee is getting paid back to the liquidity provider, in this case, us. So I can show you a scenario in real time here. Say someone has 3 Ethereum and they want to swap it, for example, USDC. Look, on the decentralized exchange, when they make the swap, they're going to have to pay a fee. In this case, it's about 20 bucks, but a percentage of that fee is getting paid out to the liquidity providers just like us. So by taking advantage of the system, we can produce income on our cryptocurrency assets. And of course, there are risks to this investing, such as divergence loss. I'm not a financial advisor. I'm not telling you what to do with your money. Now, you're probably wondering how you can find these positions, or even what type of positions to take on in the first place. So if you go over to Uniswap or Orca, the decentralized exchanges, you can start to see some liquidity pools. We have some meme coin ones like Granny to USDC. Then we have some more blue chip ones like Solana to USDC. And then we have some very blue chip ones like Ethereum to a stablecoin, USDT, or wrapped Bitcoin to Ethereum. But when we're talking about investing our first $1,000 into DeFi, in my opinion, it would be smart to either go with a blue chip to stable pool, or a blue chip to blue chip pool, or in general, just have correlated assets. So when we're getting into DeFi, investing our first $1,000, $2,000, $3,000, it probably wouldn't be the best idea to get into meme coin pools or pools with very high volatility, etc. We're going to be looking for pools that have high TVL, high signs of consistency, etc. And you're probably wondering, how can we find these pools that show signs of longevity and consistency? I'll be covering that in today's video. And if you're on Uniswap or Orca, when you're looking at these liquidity pools, you can't see a ton of information about them. For example, on Orca, if I click Solana to USDC, yeah, you can see estimated yield per 24 hours just based on 24 hours of data, but you can't see how correlated Solana and USDC are to each other. You also can't simulate to see your estimated monthly or yearly earnings. So I'll be using Metrix Finance. It's the best software for finding these liquidity pools and also doing our research about the positions, seeing the history of them, etc., and also simulating our positions to see what type of money we could be making on them. So I'm going to launch the app, and I'll leave a link in the description down below where you can claim a trial to the pro version of Metrix Finance, so you can take advantage of that if you want. So I'm going to go to the Discover tab up top, and remember, we're looking for consistent pools. So where it says select exchange, we can go with some very quote-unquote reputable exchanges such as Uniswap, Orca. We can go with Radium too. I'm not going to touch Velodrome or Aerodrome because on those you could be getting paid out in reward tokens. And if you're a newer DeFi investor, it's much simpler to just get paid out in the assets you're investing in. For example, if I'm investing the USDC in Solana, I'd probably want to get paid back out in USDC and Solana, not get paid out in Aero token or something else. So then for networks, we can go ahead, select Ethereum, Arbitrum, Optimism, Base, and Solana. And then we can see we have over 2,000 pools to choose from. But remember, we're looking for pools that show signs of consistency, etc. So normally in my videos, I say we can look for pools that have like 3 million, 4 million, 2 million plus TVL, around those numbers. But we're going to go with like something like 9 million. Let's look for pools that have over 9 million bucks in TVL. Now, right off the bat, we're looking at 105 pools. We also want to look for some pools that have somewhat decent or high APR. So for fees APR, let's look for pools that have higher than 12% APR. Right off the bat, a lot of these pools are meme coin positions like Peanut to wrapped ETH, Trump to wrapped ETH. I'm not going to pay attention to those. What I am going to look at is pools like wrapped Ethereum to USDC, pools like wrapped Ethereum to wrapped Bitcoin, USDC to wrapped Bitcoin, etc. So we could go ahead and open up this wrapped Ethereum to USDC position here. We could simulate it in a new tab. I'm going to put on my glasses real quick. And here we can enter our deposit amount. I'm going to go with about 2,000 bucks since this video is targeted for smaller portfolios. And this is just one of the cool features about Metrix is how we can run these simulations. So scrolling down, we can zoom out on the calculation range, see the pool price throughout the past 100 days or even the past 50 days, etc. So this can be a good indicator of longevity to see how long the pool has been performing. Also looking at volume history, we can see consistent volume and fees every day throughout the past, what is this, set at 103 days or so. So it's important to zoom out on your calculation range and see 80 days ago, was there volume and fees in this pool or is it very new? But to get a more accurate simulation of monthly and daily earnings, I'm going to go with about a 20-day calculation range. And now we would select our range at what price points we want to supply liquidity to the liquidity pool. So I'll just use an example for this video. So if we use a price range of about 2,213 and 3,508, we're looking at about 53% APR. Scrolling down, you can see the correlation of the assets, which is really important to look at. Like I said, I recommend looking at more correlated positions, but in this case, it's not going to be correlated just because there's a stable coin involved, USDC. And you know, stable coins aren't supposed to move. So if wrapped Ethereum starts going up, USDC shouldn't move. It's not going to be correlated with it. So we don't need to pay attention to correlation for this position. But the volume history is solid. Look, there's hundreds of thousands of dollars in fees a lot of these days. So our next steps here were to look at wrapped Ethereum, look at USDC, say to yourself, are these assets I want to take on exposure to and hold on to? And if the answer is yes, you can look into if you want to take on exposure to the liquidity pool. And if the answer is yes, you can save it to your portfolio for later. Then we can go back and look at some other options, maybe some higher APR positions, or just things that don't involve a stablecoin this time. Here we have wrapped Ethereum to Link with over 80 million bucks in TVL. We can go ahead and simulate that in a new tab and check it out. I'll change the sample deposit amount to about $2,000 again. And here we can go ahead and select our range. I'll go with a 20-day calculation range. And here, if we select our range to about 119 to 153, we're looking at about 88% APR. And with a $2,000 deposit amount, it's estimated to be $1,765 per year. Obviously, this is a simulation based on the past 20 days of data, so this could change. Scrolling down, you can see these assets are about 99% correlated. That's awesome to see. And again, if you were just looking at Uniswap or Orca, you wouldn't be able to see the correlation. So you can definitely take advantage of that Metrix trial in the description by clicking the link. Anyways, we can see the volume history again. It's solid. There's some lower days in the past couple weeks, but still it's showing higher than 10K per day in fees. And if you're ever looking at a pool such as wrapped Ethereum to Link and you say to yourself, hey, I know what wrapped Ethereum is or Ethereum, but I don't know what Link is. What should I do? So what I would do is go ahead, copy Link, like copy how you spell Link, and then go over to CoinGecko, paste it in. You can go to Chainlink here. You can find the coin, and then you can start looking into the coin. You can read about it, see the market cap. You can go down to the website, see the role this coin plays in the DeFi ecosystem, etc. So always do due diligence on the assets you are investing in. Don't just look right off the bat and say, oh, Link is showing high APR. Let's hop into it. So from here, the next steps would be remember due diligence on the assets. And if you want to take on exposure to the assets in the liquidity pool, you can hit save to your portfolio in the top right for later. If you head on over to the track section at the top of Metrix, you can track your position. So I entered a wallet here. Look how cool the tracking tool is. So you can see this wallet has about 96,000 bucks in liquidity. And you can see their divergence loss. Because look, if this wallet were just holding on to their assets in the market and were not investing into these liquidity pools, they would be at a loss since their assets depreciated. But since they're in these liquidity pools earning fees, they made 22,000 bucks in fees and are profitable. So this is really cool to see. So this tracking tool gives you a bird's eye view of your wallet, of some of the pools you're in, along with your P&L, your divergence loss, and your projected APR. If you learned something in the video, make sure to subscribe and click the notification bell so you don't miss an upload. And remember to check out Metrix Finance in the description down below. I'm glad I could get you guys a trial. Anyways, I'll see you in the next one.